Well, China's economy grew by 8.9% in the third quarter. That's the fastest pace in a year. Economists believe that may feed the growth. China has to stimulate its own domestic demand to really keep things on track. But the question is whether or not the Chinese consumer can afford to spend more and to stop saving as much as they are. Well, Nick Lardy is an economist considered virtually everyone's guru on China, and he's now with us from the Peterson Institute for International Economics in Washington. He's a senior fellow there. Fastest pace of expansion that we've seen in a year here. Is China feeding its own growth here, or are we starting to see the consumer participate, Nick?
Well, the consumer has come in a bit stronger in the first 3 quarters of this year than earlier. This is the first time in years that consumption growth has been in excess of the underlying growth of GDP. We have that firmly confirmed for the first 2 quarters, and I think when we get the final numbers on consumption for the third quarter, we'll see the same thing has happened in the third quarter. So the economy has had a very strong recovery now for 3 consecutive quarters. Certainly the investment, the domestic investment program has been the key driver of economic growth, but the consumer has also contributed quite a bit to the recovery that has been so strong.
The stimulus internally, they're a big part of that growth. The question is now, when the stimulus, if the stimulus goes away, is there going to be enough growth domestically?
Well, the consumption growth, I think they are laying the basis for stronger consumption growth going forward. They're doing a great deal to rebuild the social safety network so people won't feel they have to save so much to cover contingencies. They're raising pension payments at a several-fold multiple of inflation so people have more disposable income. And a number of other programs are going to, I think, contribute to stronger consumption growth. So I do think China is potentially here at a turning point where domestic consumption, private consumption demand will become a bigger driver of economic growth.
You know, some like Morgan Stanley's Steve Roach, who's a very well-known China watcher, say it's not that the Chinese are hardwired to save, it's that in many ways those consumers do need to. They don't have the same social safety nets that we do here in the U.S., where people can not worry as much about retirement and health care. What do you think about that?
Well, I certainly think if you go back and look at the whole reform period, the savings rate of households did go up as the social safety net disintegrated for people that work for state-owned enterprises in the 1990s, and it raised the savings rate. So I think that I agree with Mr. Roach very much that it's there's no such thing as a high Asian savings rate. It depends on the various circumstances that prevail. And as the government succeeds in rebuilding the social safety net, I think households will respond.
You think it's a mistake for the Chinese to keep the yuan pegged to the dollar?
Yes, I do. I think they're looking at the current circumstance, and they're seeing that their external surplus is just collapsing because they're growing much more strongly now. Their imports are up relative to their exports, and their trade surplus in the third quarter is down about 50% compared to last year. So I think their attitude is, well, the trade surplus is going away. We shouldn't appreciate that would make our external performance even weaker. But the underlying problem is that their surplus could easily start growing again next year. As your previous segment pointed out, the dollar is down quite a bit over the last a couple of quarters.
And that doesn't change your view?
The RMB is pegged. No, I think you really have to have a more dynamic perspective and look out where you think the economy is going to be and where you think their external situation is going to be a year or so from now, because a change in the exchange rate today tends to affect trade flows 2 or 3 quarters ahead.
All right. Thank you so much, Nick Lardy, for giving us that analysis. Nick joining us from the Peterson Institute.